Okay, let's try this again. Now, this is the beginning of my trading strategy. You're gonna need these parts for my trading strategy. So we're gonna go over as much as we can during this video. And this first video is about trends. Now, I kind of want to go over why trends are important and why you need them and why you need to have the knowledge about them and how to use them and how to use them in your favor to increase the probability of your trade working out. So currently you're looking at an uptrend and you're looking at a downtrend. This is the uptrend. This is the downtrend right here. Now, this is important because you need to understand that a trend will tell you the overall market direction of the asset class that you're trading. It will tell you where the market is going or where it's going to go during the day, right? So if your market's during an uptrend, obviously, it's going to go up. And if it's in a downtrend, it's obviously going to go down. And as simple as that sounds, you might want to consider a couple things when you're looking at a trend. First things first, we need to talk about not going against trend. Do not go against the trend ever. And what I mean by this, okay, wait, that's too big. Okay. What I mean by this is going against the trend means that you're, let's say we're in an uptrend, right? And then we're going up, but you're trying to take a position that makes you profit or makes you capitalize off it going down. You don't want to fight against these trends. You never really want to go up against these trends, right? These trends, they're really difficult to go against. So you want to become more like water in a sense, right? You want to go with the trend. The trend is your friend. You never want to fight against it. You want to go with it. You want to flow with it. You never want to go against the trend because going against the trend pretty can get you in a pretty bad spot. So always you want to try to go with the trend and try to learn as much as possible in here, right? So during an uptrend, we create something called lower highs and higher highs. And now let me explain to you what that looks like, right? And then during a downtrend, we create lower highs and lower lows. Now, I'm going to show you what these lower lows and higher highs look like. And not only that, these lower lows and higher highs are going to come into useful later. They're going to come useful later, right? So, let me show you, right? So, in an uptrend, we have, you see this little tippy top of the mountain right here where my crosshair is? This is a higher high. You can refer to this as HH. Just simple stuff like that, right? You can refer to this as HH, which is a higher high, right? And then you see this bottom part right here, where we get to the bottom tippy part of the mountain. This is a higher low. And then we create another higher high going up. And every time we make a new high, we we create a new high going up, and then we create another higher low right here. And then we start creating another higher high up here, right? So you get the point. Now, a higher high is formed every time we break past an old high. So right here, this was an old high, but you see how we break past this high right here, right? We come back to the bottom and then we snag past this high, right? So when we snag past a high and we go up even above that high, we create a higher high. And then we go down again, retrace it, creating a higher low. Now, now a higher low means that we're not breaking below the previous low, right? So this is the low right here, but you see how we never come down to reach for this previous day low. We stay right here, somewhere around here, and then we just continue the trend, right? Then we make another higher high, breaking past this high right here. You see? We made a break pass by that high, and then we made another higher high right there, breaking past this high. Now every time a high is taken out, we make a new higher high. Like I said, right? We come up, we come back down, created a higher low. A higher low is basically just an area where we retrace. You may not know what retracement means yet, but I will get into that in more future videos, right? So a higher high, every time we take out every high, right? We come here, higher high, then we come back up, creating a new higher high, then we come back down, create another higher low, then we take out this high right here, making another higher high. Now you get the gist, right? Every time we take out a high, that makes another higher high. And then you see how we keep taking out the higher highs, every high. This was the high. Now this is the higher high, and now this is the higher high. We kept taking them out. Now, with that being said, this is what an uptrend looks like, right? This is what an uptrend looks like. This is a higher high, a higher high, a higher high, higher low, higher low. And right here would be a higher low as well. But I just didn't mark it out. And then this would be another higher high, right? So this is an uptrend. This is why I say you don't want to fight against the trend. So let's say the trend is moving up and the market direction is showing signs of it moving up. You want to be able to follow that trend and not go against that trend. You don't want to fight against the trend, because fighting against the trend can lead you into some pretty bad losses, right? So you always want to go against it. You want to go with the trend and flow like water. Always flow like water. Never fight against the trend. Fighting against the trend is a bad idea. It is always a bad idea. The trend is your friend, and it's not there to harm you, right? You just want to go with it, trust in it, and then just follow it. That's all you need to do. You don't need to go against it. You don't need to catch the top, like where you don't need to catch the top or the bottom. You just need to follow the trend, right? Now, with that being said, we're gonna get into a downtrend. This right here is a high trend. This is a high trend, right? This is the downtrend. This is a high trend. This is We as traders use this as a bullish trend. We also use terms such as bullish and bearish. Bullish means going up, bearish means going down. And if this helps you remember it better, bullish means, the reason why we call it bullish is because a bull has horns, and a bull attacks swinging their head up, while a bear attacks swinging their claws down. So this is a bullish trend. This is a bearish trend, right? Now, let's get into the bearish trend or the downtrend. This is a high trend. This is a downtrend. I mean, I forgot the term for it. I know it's not called a high trend, but I would definitely just rather use the proper term, which is a bullish trend, and then a bearish trend. So I'll just be referring to it as bullish and bearish from now on. Okay, so let's get into the bearish trend, right? Or the downtrend. So ideally, a bearish trend starts off coming here, right? And then we can't break past this. We can't break past this low right here, right? We're never able to break past this low. So as you can see, we keep going down. But something you'll notice, we're never able to break past these highs right here, or these lower highs, right? We just keep going and breaking past lower lows, right? We break past this lower low right here, and then we break past this another lower low. You can see how we keep taking off these lows. This is what a downtrend usually looks like. We just continue taking out lows and lows and lows and lows until we reach where the market wants to reach, or where the market wants to reach and where the market wants to go, right? So as you can see here, this is what it looks like, right? Look, we come down here, then we retrace back up, but we're never able to break past this area right here, right? We're never able to break past this area right here, right? Right here. There's an oh, okay. Let me just delete that. That was definitely a wrong way to go about it. Okay, as you can see, we're never able to come back up here, right? This area doesn't break past here. This doesn't mean that it won't, but it's just not breaking past here right here. So now this tells me that the trend is changing, right? Or the trend is still in a downtrend, right? Because we're never able to break past here. If somehow we just decided to come back up here, that would mean that the trend is still bullish, right? Because we're taking out these highs, or we're just retracing back up to something else, right? So, but we're never able to break past there, right? So this is a downtrend. Look, as you can see, we create a low high, right? This is a low high. LH, which stands for low high. Then we create a low low, which is right here. LL stands for low low. And then we continue going on, right? We create another low low right here. Create another low low right here, and then we create another low we create a low high right here, and then going on so forth, right? This is what a downtrend looks like, right? This is what a this is what a bullish trend looks like. This is what a bearish trend looks like, right? We come up, we create low highs, and then we smash past the lower lows. So think about it this way, right? In a bullish scenario, when we're in a bullish trend, we take out the high highs, but in a bearish trend, it's flipped around. So just basically flip how the trend in the bullish would be, and then just flip it around for the downtrend, right? Or the bearish trend, right? Instead of taking out the higher highs, we take out the lower lows or the lows, right? And that is kind of what it is ideally, right? We do that and we just start taking out these lower lows. As you can see, we take out low low right there. Then we take out another low low, and then we take out another low low, and then we come back down to take out another low low. Now, ideally, this is what kind of these are kind of areas where you would kind of ideally want to take entries, right? So this is a good example of what you should do. Now, this is just the beginning, right? Now, I'm going to be going into a lot more in terms of strategy and just like a lot more in terms of like a whole lot of other stuff. So, with that being said, right, let's get back to what we were talking about. I'm sorry, I don't want to get off track and I just kind of want to get to the point. Now, with the low lows and the lower lows, in a downtrend or a bearish trend, we're always going to be taking out the lower lows, but we're always going to be making retracements to make lower highs every single time. We're going to be making retracements to make lower highs, but we're always going to be taking out the lower lows. In a bullish trend, in a bullish scenario, we're always going to be taking out the higher highs, right? So we're always going to be coming up here, coming back down, taking out higher highs, and then taking out higher highs again, and then higher highs. But in a bearish scenario, we always come up to make a low high, but then we always take out the low lows. So you can see we take out the bottom parts of the downtrend, right? So we come back down here, taking out low lows, and then continue taking on low lows until we reach wherever the market is deciding to go. Now, this is what a trend looks like. And you want to follow these trends. You don't want to go against them, right? This doesn't mean that you should go out, go trade, and go trade this. That doesn't mean that's not what I'm telling you. I'm just telling you to just take a look at trends, and you'll see what I'm talking about. Every time we take out lower lows and we take out lower lows, then we somehow retrace back up, and then we can't break past the high, and we create a lower high, and then we come back down to take out the lower lows. And we always do that during these trends, regardless if it's bullish or bearish, right? In a bullish scenario, like I said, we take out the higher highs. In a bearish scenario, we take out the low lows. So, with all that being said, you always want to follow these trends. You never want to go against these trends, because if you're trying to short here, chances are you're going to get stopped out pretty fast, right? So, with that being said, this is what a trend looks like. Now, let me show you a real example through the charts, right? Because I don't want to just show you an example like this, right? Let me show you what a real example would look like, right? So, I will be right back to show you that example right now. All right. Now, let's get into the first example, right? You're currently looking at an asset class called gold, which is XAUSD. Now, I found a perfect example for this on the chart. Now, look, take a look at this, right? This is a clear example of an uptrend, right? So let's talk about this, right? We start the uptrend right here, right? We started right here, but as you can see, we come back down to make a lower. We come back down to make a lower high. No, wait. A higher low. Sorry, I apologize for saying that. We come back to make a higher low. We retrace, and then you could see this is a high. This is a higher high right here. This is a higher high. But you can see as we continue going on, as the uptrend continues moving, we come take out these higher highs, right? And then we form a new higher high, right? We form a new higher high right here. And then we continue to take out this next higher high right here, right? We take out this higher high somewhere right here. Then we form to take out a new higher high, right? And then you get the gist. We start taking it out and then we continue making higher highs and higher highs. But as you can see, we also retrace and we also come back down to make higher lows, right? This is a higher low. But as you can see in this area right here, we never come down to take these guys out. So once in an uptrend, we're never going to come back down here to take out the higher lows, right? We just continue to take out whatever and what's so and going on and so forth, right? And then we take out these higher highs, forming this last higher high up here, right here. So this is the end of the trend, right? This is the end of the the bullish trend, right? Then as you can see, now we start switching the trend around, right? Now, look, as you can see, we switch the trend out. So this becomes now, if we scale down to the 1 minute, um, where's my stuff? Where did that? Okay, as you can see, we start during a downtrend. Look, we start forming these things and we start taking these out, right? So we have a lower low right here. Okay, like I was saying, right? We have a lower low right here. Then we create a lower high. Then we take out this lower low, making another lower high, then creating this lower low, and then creating this next lower low, taking out this lower low right here, and then creating another lower low, and then creating another lower high, and then that lower low gets taken out right here. Now this is in a scenario where all of this is a downwards trend, right? All of this right here, what you're currently seeing, is a downtrend. It's a downwards trend. All of this is just very simple. It's a very simple concept, right? You can see right here, every time we take out these lower lows, we make another lower high, and then we continue on to go to take out those lower lows. We make another lower low, a lower high, and then we take it out. And we continue doing that until the trend changes. As you can see right here, this is when the trend starts to change, right? Higher high, then another higher high, then more higher highs, and then another higher high, and then we make a higher low, and then we continue doing that until the trend changes, right? And then the trend will constantly keep changing. But this was honestly a very good example of what it looks like. I mean, there's not really much to go about over here. Like, this is what a downtrend looks like. This is what, and then you guys know what an uptrend looks like right here. This is another good example, right? This is an uptrend right here. Look at that. See? We continue making it up towards until we get up right here, right? We continue going until we get up here, until we get up right here, right? Take a look at this. That's the uptrend. Sorry for the horrible visual represent like the representation of it. But I mean, honestly, this is really the best example I could probably show you, right? Every time we're in a downtrend, we take out the lower lows, the lower highs, the lower lows, and the lower highs, and the lower lows, and the lower highs, right? And then once market changes, as you can see, we start coming into an upwards trend or a bullish trend. We start making higher highs, another higher high, and we continue making those higher highs until we get to whatever point of scenario we want to. Now, you ideally will always want to follow these markets. You don't want to go up against these trends. You always want to follow them. going up against the trend could be bad for you in any sort of way. Now, let's say you wanted to take a long position, which means you were betting that the stock was, or the asset, whatever you're trading, is going up. You would have got stopped out somewhere right here, right? You wouldn't have been able to catch this trade. But let's say you decided to take the short right after you saw that we had a market structure shift, which means that the trend changed, and you decided to take short right here. You could set your stop right there, and then you could just continue on following it, so right, until it hits whatever desired outcome you want it to, right? So this would be a good idea, right? Hits desired outcome, and then it could keep going and going and going and going and going and going until whatever happened on whatever you wanted to happen, right? So ideally, I mean, that's the best way I could put it, right? There's nothing really more to it other than like trends, but I mean, other than that, there's not really much I should go over here. I mean, all of this is just basically what it really does look like. But other than that, I mean, you guys should be fine. I mean, this is the trends video. This is part one. I have a psychology video coming out after this one, to pair them to. But other than that, there's really not much to go over here now, right? This is basically everything you kind of need here. There's not really much to really go over here. And yeah, I mean, I hope you found this insightful. Um, and I'll see you in the next video.